model, if I were to break traditional food supply chain, it starts with farmers. Then after the harvest, the farmer sells his produce to a trader, then distributor, then to retailer, and then to consumer. From this chain, we can understand that farmer is the one who is putting most of the efforts and getting the lowest share of the pie.
First of all, B2C requires a large, deep pockets, deep funding. You need to have muscle power to invest in people, marketing, technology. We tried a lot post-COVID and during COVID, and that we realized that because we are listed, because we cannot afford to lose money of our shareholders, we decided that we will never have a model which will be loss incurring model.
So if I talk about industry practice, there's a perception that 30% of farmers' produce goes to waste, but at your company it's only less than 3%. How is that?
What Prime Fresh has acquired over the last 18 years cannot be acquired by someone overnight. It takes huge time to build farmer network, to build right team, to build right processes.
If I talk about two companies that come into top of my mind in your industry, that would be Country Delight and then would be Zomato's Hyperpure. Country Delight is into B2C, Hyperpure is into B2B. So, sir, they have diverse product portfolios, right? Still, they are loss-making at net levels. What is it that you have cracked and they have not been able to? There were 3 farm laws that were introduced by government in 2020, but facing a lot of repulsion from people, government had to take back those laws. Was it because they were not educated enough, or second, I would say, was it a propaganda that was run? Hi everyone. Quick commerce is growing quicker than ever. From companies chasing 10-minute deliveries to them diversifying their product portfolio to offer everything from needle to aeroplane have become a new normal. While these companies still remain loss-making on net level, we are with a company today that has not only cracked supply chain but has also been profitable despite offering only 2 products, that is fruits and vegetables. We have with us Hiren Ghelani to discuss everything about the company, the sector, and to discuss if the traditional fruits and vegetable sourcing is losing its charm. Thank you for joining us today, sir.
Thank you. Thank you.
Thank you, Hiren, for joining us today.
Thank you.
Sir, if I talk about the agriculture sector, it is backbone of an economy, and in India it contributes almost one of the highest to GDP. Still, the sector is very looked down upon. So, from what I understand, your brother has experience in FMCG and you are more of a finance and strategy guy. So, what industry gaps did you identify that led you to starting this company?
Sure. So, in 2007, April, me and brother, when we were sitting across and we were brainstorming the idea of fruit vegetable supply chain, he suggested that this business is still a lot unorganized. And I personally see that it has to be organized at some point of time. And those days, a lot of modern trade retailers were emerging as a very formidable player. They were expanding a lot. And he also was very keen to focus on B2C because he was also working with retail chain those days with Subixa Retail, and he felt that it's a wonderful time to have a direct reach of fruit vegetable to societies, and that's how he thought that A, of course, B2C is a big opportunity. B, the sector is not organized.
Okay, so coming to your business model, if I were to break traditional food supply chain, it starts with farmers. Then after the harvest, the farmer sells his produce to a trader, then distributor, then to retailer, and then to consumer. From this chain, we can understand that farmer is the one who is putting most of the efforts and getting the lowest share of the pie. So what is the model that you operate in? How is it different from traditional models?
Sure. So first of all, let me connect with how this whole F&B supply chain system is operating, both at the organized level and the traditional level. So in traditional value chain, farmer either approaches a local area aggregator or some sort of an agent. Then that material is sold to some nearby APMC or a far APMC. And basically APMC is a marketplace where buyers come and they purchase. The buyer could be a retailer buyer could be a modern trade employee, or buyer could be a prime fresh employee, right? So this is how traditional supply chain operates. I don't think there are many lacuna in this traditional supply chain, but I believe there is a lot of scope for transparency, efficiency, and improving the way the whole ecosystem is operating. People believe that there are multiple stakeholders involved between customer and farmer. I believe that each one of them have their role to play, and each one of them have a scope to upgrade themselves and improve their working style, wherein there is a lot of transparency for the farmer and the consumer, and there is a lot of scope for improving the hygiene practices, the handling practices, the packing practices. So when I talk of a Prime Fresh Limited, we have multiple way we run this business in terms of operational model. So we have farm model where we directly buy from farmers, and we directly transport that material to multiple type of end buyers. It could be a food processor, it could be an exporter, it could be a last mile APMC in Siliguri or Delhi, it could be sometime a global buyer, and it could also be like your quick commerce and modern trade retailers. So when we run this business, as I said, we have a multiple type of operations. One is we have a farm operation, then we set up our own collection centers, like how milk companies set up collection centers, where we kind of handhold farmers nearby collection center area, we educate them, we train them for the harvesting, sorting, grading, packing, and they bring the material which will get them the best value. We also help them selling grade B, grade C, grade D materials, and ensure that they also get the best realization of the full farm. So that's the main model which we follow in terms of procurement. Right. And in terms of operation, our involvement is also at a pre-harvesting stage to evaluate the farm, value the farm, and also helping them to put sorting, grading team, packing team, and try to kind of brand it and pack it as per end customer's requirement.
So will it be right if I say it's more of a F2C or F2C model, where farmer to consumer, consumer could be another business to, or consumer could be
right. So our business largely focuses on B2B. When I say B2B, I could have various omni channel strategy in place, where we have multiple type of buyers, whether it is an APMC in anywhere in India. We work across almost 85 APMCs across the country. We have about 10 to 15 food processing companies who make purees, pulp, pickles, etc. We also have a lot of exporters has tied it up. In mango and in some fruit season, we also do last mile delivery to customers. So it is a B2C for us when we sell to last mile customers. But I think largely we are a facilitator to a lot of supply chain partners at the front end, and we focus a lot on building a back end.
Got it. So, sir, how does this model help you to bypass the cost of, let's say, APMC, which is typically like 8.5%?
Right. So, as you rightly said, in different APMCs, in different products, the margins which APMC broker or an APMC seller would levy to the farmer or to a trade partner would be between 6% to 10%. This is a broad range across country for fruit vegetable segment. What happens that it is not only 6 or 8, 10%. It is about transparency. So you are a farmer, or I am a trader, or any other supply chain partner like Prime Fresh. When they send material to APMC, the biggest challenge is that the seller, right, the end the guy who is dispatching to the mandi guy, he does not know that what is the realistic price at the marketplace that day. Right. So I believe that whether 6% or 10%, it does not appear to be too high. The reason being that the mandi guy or any trade partner, when he sells, he incurs a credit cost. He has certain wastages in the process. He also has some operating overheads. So broadly, he would end up earning between 2 to 5%, which is not a very big margin which he is earning. The question is that if a farmer has sent a pomegranate and the market price of pomegranate is 140 rupees that day prevailing, but the farmer is told that I have sold your material at 120, and on 120 that 10% is deducted. So the whole issue is more of a transparency and not only the middleman margin, in my opinion.
Stop. Before you invest another rupee, ask yourself one simple question. When was the last time you heard the real story behind your investments? We are Green Portfolio, an asset management company managing around 1000 plus crores. We are a team of 40 plus professionals, including CAs and CFAs. Aside from tracking companies, we are inside the room with the management and on factory visits asking very tough questions. With Green Sharks, what we bring you is the direct conversation with the management of listed companies. We are building not just another channel, but a community where we are giving you a chance to ask your questions indirectly to the management of listed companies. You can join the community with the link given in the description below. We are your research team, getting you in the room of the companies you want to invest in. So, welcome to Green Sharks, an investor's edge in stock research. Okay.
Yeah.
So just to understand better, what all are the products that you deal in?
Yeah.
If you could classify
Right.
them.
So our core products are pomegranate, onion,
Okay.
banana, tomatoes, orange, sweet lime,
Okay.
and few seasonal products like mango,
Okay.
etc.
So, sir, you take it from the farmer, and then do you have your own storage facilities
Yes,
for
yes.
because these are all seasonal fruits?
Right. So we have around 22 facilities across country, primarily in Maharashtra, Gujarat, Rajasthan. We work across 85 districts of Maharashtra, Gujarat, Rajasthan. Last 2-3 years, we've been working very hard in Karnataka and UP as well. We have set up our collection centers.
Okay.
We have set up our distribution centers.
Okay.
We have around 16 collection centers. 7 are full time. 8 are seasonal.
Okay.
And you know, when it comes to distribution centers, we have 7 distribution centers in Ahmedabad, Pune, Bombay, Delhi, Lucknow, Bangalore, Hyderabad.
Okay.
Now, at these distribution centers and collection centers, we have dry space. In some of the collection center and distribution center, we have a cold storage also.
Okay.
We also have a third-party tie-up with cold storages, and we ensure that as and when required, material is stored also. And we also have a third-party supply chain partners where they create capacities, we fund them.
Okay.
Okay, and they allocate a separate space for Prime Fresh or our group companies.
Okay.
And we help them invest and build those capacities. So of course the storage is also required. Also you need a separate material packing material handling area also. And as and when required, as I mentioned, we can outsource third-party cold storage also.
Okay. So, except for the outsourcing, all the distribution centers and warehousing facilities, do you own them or do you operate them on asset leasing, or do you?
Yeah, we operate them on an asset-light model. We rent them out for a 3, 5, 10 year, depending on the our vision in that area or for that product.
Okay. So when we were talking about bypassing APMC cost, you told that there is a lot of wastage too. So if I talk about industry practice, there's a perception that 30% of farmers produce goes to waste. But at your company, it's only less than 3%.
Yeah.
How is that?
Right. So, okay. So in fruit vegetable supply chain business, the way people think that 30% is wastage, first of all, I think it is a misconception.
Okay.
The real numbers could range between 5-7% going up to 20%.
Okay.
In some products, like pomegranate, it could be as low as 3-4% also if you efficiently manage the supply chain. The real losses has to be analyzed based on harvesting till the last mile selling to the customer.
Okay.
Right? Now there are 3-4 layers. If you look at the material, when once it is harvested, it is brought in some corner of the farm, or some farmers have their own some sort of a warehouse or a dry place. There the material is sorted, graded and packed. Okay. Then the material moves and it transits to a particular mandi or a food processor or a modern trade customer or a DC of somebody like Prime Fresh. Okay. Right. So the stage 1 post harvesting, material will of course start losing weight depending on the which category of material. It depends within what hours you have sorted, graded, packed and loaded the material for the next move. Okay. So I think our understanding is that it could range between 1 to 3%. Okay. And once you have loaded the material, again it could range between 1 to 3% till it reaches the next level of selling. Yeah. And then I think at selling point, depending on where it is, how far it is, it could be again 1 to 2-3%. Now, when it has gone to a last mile retailer, okay, what happens is that if retailer is not able to sell the product faster, or if retailer has not been well organized in terms of holding his material, he could lose between 3 to 10% maximum.
Okay.
Maximum. And if he is not able to sell
Okay.
within certain days, 3, 4,
Okay.
5 days, because
Okay.
it is perishable product, so you could end up losing 5, 7, 8% more, because certain percentage of your total arrival at your retail outlet was not sold.
Okay.
And it became second grade or third grade, or it became a final dump. Our understanding is that this 20% is also at the way high. It's at the top end.
Okay.
If you build it rightly, if you run it rightly, and the way the whole sector is getting organized, the way the whole e-commerce and the modern trade partners are coming, the way the whole exporters are doing, I think if you end to end manage it well, it should not be more than 10 to 12%.
Okay.
For example, it could be little higher in grapes, it could be more in leafy,
Depends
but it could,
fruit to fruit.
but it could be, let's say, very low in, let's say, onion or pomegranate.
Yeah.
So broadly, at our end, how we are managing below 3% is that we are quite efficient in turning the material to the right marketplace.
Yeah.
We are also quite understanding in terms of what material need not be loaded, packed and moved further.
Okay.
Because if you move a B or a C grade material to a far distance, then you will have a bigger wastage.
Yeah.
So at farm point, if you are able to identify the material into class of material A, B, C, or a grade of material X, Y, Z, and if you manage that well, then definitely there is a huge scope to cut this wastage.
So it's all about managing the supply chain,
I
not
think
only
so.
supply chain, but storage and warehousing too.
The way you handle it, the way you pack it, the speed with which you sort, grade and pack it, that will decide the wastage part.
Okay. Sir, so from what I understand, you buy an entire farm from farmer and not just a percentage of produce, right?
Yeah.
So you buy this produce on a pre-agreed price, right? How do you come to this price?
Right. I'll explain it. So how the process is, let me just go a little back into it. So there is a team, a field team, which keeps moving around.
Okay.
Particular identified agri belt, particular agri product portfolio. They keep meeting farmers. They keep visiting farms. They keep documenting details, the data, right from their sowing to pruning to fertigation to harvesting, and then at the time of the harvesting, there is a model called farm evaluation model which we have built.
Okay.
And there is a second model which we have built, is a farm valuation model.
Okay.
These are very proprietary model which we have built after years of learning.
Okay.
Where our field team provides input, about 10, 12 data they provide based on their analysis, understanding as per the standard model provided. And that model will throw that what is a probable yield at the last mile or wherever I am selling will come.
Okay.
There is a reverse calculation of what is the in-transit weight loss, what is the cost of selling, what is the transport cost, and then of course what is the sorting, grading, packing cost or labor cost or miscellaneous cost. And based on that, we do a reverse calculation and we arrive at a X farm price.
Okay.
That is one way of doing it. And that X farm price is a price which we offer to a farmer. We mutually negotiate, discuss, and then there is a deal slip, farm deal slip, which happens, and that's how the farm is bought.
Okay.
Now, when we decide the price with the farmer, we have again a class of material, grade of material, right? And then which material should get what price.
Okay.
And then there is a totaling of the whole table, and that throws the farm value.
Okay.
And that farm value divided by the total quantum of produce, which could be we would be ending up harvesting and packing. So that's how the average price comes in.
Okay.
And that average price we offer to farmer. Sometimes it is a farmer-driven market. Sometimes it's a market-driven prices, and that's how the deal takes place.
So it's a pre-agreed price, right? But consumer is not always but farmer is not always rational. Let's say the price was locked at, let's say, 50 per kg.
Yeah.
And there is some natural calamity that happened that reduced the supply of the XYZ product.
Right.
Or there could be a geopolitical tension.
Yeah.
Right. That has put constraint on the supply, but there is enough demand.
Yes.
So that would raise the prices of that product up. So how do you ensure or how do you incentivize the farmer to fulfill the agreement?
Sure. So first of all, these deals are time bound, right? So when I do a deal with, let's say you are a farmer, I have done a deal with you for a sweet lime farm of 200 ton at a price of, let's say, 22 rupees. Now when we do a deal with you, there is some sort of farmer deal slip where farmer signs, a local area, some person also sometimes signs, our employee also signs, and there is some sort of a commitment, a binding at both ends. When the prices drops at the marketplace, I will still buy, and market goes up, still you will supply. Okay, because that point of time when the deal took place, you were happy with that price. However, in 3 to 5% cases, sometime it could happen that farmer backs out. Okay, he says no, market has gone up, now I don't want to sell it. So we sit across table. Again, we sometimes have to renegotiate the deal. The field team will call the sales team. Field team will call the the approving team, managers, and then sometimes we do the relaxation and we take the hit. And we take the hit on the margin or whatever, and then we buy it. At times we may have to leave the farm also in such kind of situation.
Has it ever happened to you?
It had happened many times. Recently, 2 weeks back, it happened in banana, when the deal was done with the farmer.
But he backed out.
The farmer backed out. He stopped picking up the phone of the field team guy. And then we could not execute.
So, sir, there's a lot of risk. You cannot ensure that 100% of the agreements would be fulfilled because they can back out, right?
So, you will have to go into assessment of the probability and the percentage. So, if my total purchase of company is the direct farm buying is 55%. My collection center buying is, let's say, 20%. My supplier purchase is, let's say, 15-16%. And my balance purchases through other mode of supply buying. Out of that 55%, if 3 or 5% deal doesn't work, it is around 1.52% of the overall
So you take calculative risk.
It's a calculative risk.
Okay.
Right. So it's not a big number. It's a quite manageable number.
Right. So before I move to your client base, I would like you to simplify or break down your business into foods and services, the margins you are getting, B2B, B2C, whatever.
Sure.
In easiest language possible.
So Prime Fresh Limited primarily operates 2 businesses. One is a service business. Another is a supply chain business in fruit vegetables. When it comes to service, we provide around 21-22 type of services, right? The ripening of fruits, storage of fruits, loading, unloading, sorting, grading, premium packing, warehouse management, even crate sourcing, even data entry. These services we provide to Reliance Fresh at 4 locations in Ahmedabad, Surat, in 2 locations in Mumbai. We have other client as Wagh Bakri Tea, where we manage their warehouse for tea products. There are a couple of other clients into spices and pharma and all. So the service business contributes around 10 to 11% of our total sales. So for example, last year we had a sales of 207 crore in FY25. I think around 11% of sales would have come from this service business. Service business is more people intensive, more operation intensive. It has multiple locations. It operates from around 7 locations, 7 or 8 locations. When it comes to a second piece of the business, which is fruit vegetable supply chain business, which is a very core business for us, which we have been growing at a very aggressive pace over the last 5-7 years. In fruit vegetable supply, we simplified as a procurement, processing and placement. So as I mentioned, in procurement, we buy from farmers. We have our collection centers. We have large big suppliers. We have some local area aggregators. Then we have some sort of arrangement with some farmer groups or FPOs for joint venture farming, lease farming, contract farming, etc., which is a very small percentage of our overall sourcing. Right? When it comes to the second part of the F&B business is the processing. So right from harvesting, what to harvest, what not to harvest, when to harvest, and then post harvesting there is a sorting, grading, packing and logistics, right? And the third part of the F&B business is your placement, is sales. So we are an omni-channel strategy company where we have 6-7 type of channels. We are also trying to build Horeca as a new channel, and we are also trying to work on a tender business, which is as a new channel. So I think this summarizes that how this business operates at Prime Fresh.
So if I were to break it down or put it in a nutshell, let's say 100% revenue, I can divide it into 2 segments. 80 to 90% of your revenue, 90% comes from
fruits
and
supply.
vegetables, 10 to 11% from the services.
Yes.
And amongst that food and vegetable business, what is the segmentation between
Fruits and vegetables.
B2B and B2C?
All right, B2B and B2C. All right.
Mm.
So around 97% of our business
Okay.
comes from B2B.
Okay.
Right.
So, sir, from what I understand, if I am Reliance, I have two ways to deal with you. Either I can avail your services,
Yes.
or I can take products from you directly.
Yes.
So let's say I have Reliance Fresh.
Yes.
Either I can take your fruits and vegetables which you have graded, you have stored, you have incurred all the costs.
Right.
Or I can give you my own produce,
Yeah.
and you can grade it for me, store it for me, and charge accordingly.
Yes.
So do you have Reliance as a client?
Yeah.
So what, both of these segments that I just told, which category do they fall into?
Okay. So Reliance is a client where we are into both the segments.
Okay.
So we provide a lot of services to Reliance, as I mentioned, at 4 locations.
Okay.
We also provide fruit vegetable supply to Reliance through our subsidiary company, Florence Farming Private Limited.
Okay. So you are dealing in both the aspects.
Right.
Okay. So what stops these big companies, like you have recently tied up with ITC2 or Reliance or Adani, from backward integrating? Why are they taking produce from you?
So first of all, I always say that this market is huge. It's a very large opportunity for all the players.
Okay.
And second is, not all the players can do everything.
Okay.
Thirdly, there is a huge scope for collaborations and partnership, because the skills, the relationship, the supply chain, the whole process, the know-how of the product, the know-how of the season, know-how of the packing, what Prime Fresh has acquired over the last 18 years cannot be acquired by someone overnight. It takes huge time to build farmer network, to build right team, to build right processes, to build that agri belt, to build that product knowledge, packing knowledge. And hence there is a huge scope for all these customers, whether it's modern trade, e-commerce, quick commerce, food processors. They can always rely on Prime Fresh as a more dependable partner. Okay. So it is never about they're not having the opportunity. Okay. They do have, they are working. They also have their supply chain. Like for example, ITC is very good, let's say in chili or tomatoes, and we are very good in pomegranate or onion. Right, so there is something called cross-selling opportunities exist. Right, so if Prime Fresh has built a solid supply chain for onion Nasik or pomegranate Maharashtra, Gujarat, Rajasthan, or orange in let's say Varud, Amravati, Nagpur area, then they would end up buying this product from me. And it has happened that many times we have bought a lot of products from Reliance too. Like Reliance has imported some fruits, and we have a good buyer. Okay. And we have bought from Reliance and we have sold. Like we have bought tomatoes from ITC and we have sold. Okay. And we have supplied pomegranate to ITC also. So I believe that first of all, there is a huge scope for everyone to do a further bigger backward integration. Okay. But since there are so many areas, so many products, so many states, India is large, and there are more than 280 to 90 products which are more active, vibrant. Yeah. I think there is a huge scope two-way for all of us. Okay. So going back a little bit, when we were segregating your business, out of the 80-90% of fruits and vegetables, right, only 2 to 3% was B2C, right? Yeah. Do you plan on expanding into B2C segment? Do you see the value in it? So, first of all, B2C requires a large, deep pockets, deep funding. You need to have muscle power to invest in people, marketing, technology. We understand B2C since our inception, because we were a B2C company when we started day one. We tried a lot post-COVID and during COVID, and that we realized that because we are listed, because we cannot afford to lose money of our shareholders, because we cannot do something which will destruct or destroy the capital. We decided that we will never have a model which will be loss incurring model, and hence we have not gone aggressively in that space. However, we believe that there is a huge scope in franchisee lead B2C model. Okay, and we have done a lot of homework. We have worked with India's top consultants. We have invested a lot of money in the last 3 years in building the whole model, the processes, and we have formed a company which is a 100% subsidiary of Prime Fresh Limited. Okay. And that the name is Prime Fresh Retail India Private Limited. Okay. We believe that for Prime Fresh, if and when. If it want to get into B2C, the right way would be a partnership model or a collaboration model, where somebody comes in with a strategic partnership with Prime Fresh, where they understand and they believe in Prime Fresh supply chain capabilities, Prime Fresh understanding of the entire fruit vegetable business, how it works, and Prime Fresh understanding of retailing. And Prime Fresh could bring in skills and the ideas and the expertise, and we need a good financial partner in that subsidiary, and that should be independent SBU type of a structure where Prime Fresh shareholders does not end up allocating capital and losing capital. Because it would take years. It could take 3 years, 5 years, 7 years to build a retail model. But I believe there is a huge scope in franchising model.
It's gonna be entirely different from Prime Fresh Limited, and you're gonna focus on B2C segment. I think it's still in ideation stage. You haven't done anything about it.
Yes.
But do you see, if you were to, let's say, expand into B2C segment, do you see yourself thriving on subscription model like Country Delight does?
Right. So there are many kind of models, and I think there is a scope for all of them. Whether it is subscription model, whether it is a footfall direct coming, whether you provide a delivery and then you take the payments. I don't think customer has a problem in paying for any kind of model. I think the real thing is quality. Okay. So lot of fruit vegetables are not handled well and not reaching to customers in a right framework. I think the real opportunity is the hygiene part, the packing part, the quality part, the organic part. So I mean, if you were to ask me, the focus should be on satisfying consumer. Payment, Indian customer is evolving. He's growing, he's willing to pay.
You have hit the bullseye with that statement, because recently I read that people say subscription model would never succeed in India, but if you look at our traditional households, we have been paying for newspapers since decades on subscription model. Indian consumer is ready to pay only if they find the value and quality in that.
Exactly.
Okay. So if I talk about two companies that come into top of my mind in your industry, that would be Country Delight and then would be Zomato's Hyperpure. Country Delight is into B2C, Hyperpure is into B2B.
Right.
So, sir, they have diverse product portfolios, right? Still, they are loss making at net levels. What is it that you have cracked and they have not been able to?
Right. First of all, there is a lot of change in the business model, the way they work and the way we work. The business model is last mile customer, and there is a huge logistic cost. There is a huge service cost, marketing cost. And there is also a dark store model where you have a lot of cost of material storage as well. In our case, because we are a B2B company and because we focus a lot on the back end, last mile sourcing, and we follow a cost plus model, we have a choice not to accept certain orders, or if margins are not proper or if it is a loss making proposition, we may deny the business, right? In case of our business model, we are more of a back end to all e-commerce or modern trade retail players, and hence it is more about fulfillment for them. It is more about time for them. It is more about service and supply for them. So they would allow us to earn a reasonable margin. And that is how we are trying to position ourselves, that we will not make losses and we will keep investing in the back end. The another way why we are making profit is that we tend to pay very fast to our suppliers and farmers. So when I pay very fast, like same day or the next day, I end up buying cheaper by 1-2%, 1.5%, 3%. The second thing we do is that we tend to, in a weak time, in a bad time, when the product is in a full-fledged supply, and then it is in a peak season, the prices have dropped. We try to take the advantage of that situation. And when farmer is in a position where he has to throw his material, we go and we give them the fair price. We take the risk of the material. We store the material, and we get some sort of a upside, because the prices when they are at the bottom, you always have a little uptick over a period of time or during the off season. The third thing which we do is that we have remained very lenient in our cost structure. So we have always ensured that our corporate overheads are very low. Our top management is believing in creating value, and we have always remained hugely underpaid on our expenses or salaries which we take from company. And the fourthly, we have made our team member as a partners. Okay. So we are trying to build a lot of entrepreneurs, decision makers. Okay. We have in-house models, structures, data where they take more appropriate scientific logical decision. They are empowered to take decisions. They are trained to take decisions, and they also know that if I take the right decision for my company, I have a huge upside in terms of incentives or in terms of ESOPs. Right. We also have a loyalty bonus programs for our employees who complete 2 year, 5 year, like that. So I think combination of reasons that helping us to remain profitable in this business.
And sir, since we were talking about Country Delight and Zomato's Hyperpure, they offer diverse product range. Why have you as a company restricted yourself to only 2 products, fruits and vegetables? You could explore into dairy, pulses.
So I would put it fruit vegetable as a category. Within fruit vegetable there are multiple products, of course. But when we were building this company and somewhere in 2014, when we were brainstorming what we have done in the last 7 years and where we are today, and we are working so hard and we are putting capital every year, and there is not a great breakthrough, we realize that it is important to be focused and building a product portfolio. Traditionally in agriculture, you have to be very, very efficient on a product side of it. So we decided that we will focus on a product and we will focus on agri-belt. We will focus on a team which is focusing on that category, and then only you can become efficient. So our understanding is that it is better to do few things, keep doing that consistently, tirelessly, and keep on improving it, and that's how you will become profitable. So we are not a typical trader or a distributor, right? We are more of a originating product wherever it is grown in a particular belt. Like for example, in Maharashtra there are 18 belt where pomegranate is grown, and we are present across all belt to de-risk ourselves from volume or climate related issues. And that becomes my USP for my customer, that Prime Fresh can provide me round the year 10 months pomegranate from Maharashtra, Rajasthan, Gujarat. So we have built close to 30 belt across Maharashtra, Gujarat, Rajasthan, Karnataka for pomegranate. So we realize that it is better to be product focused and build each categories, each products very deeply across multiple belt, agri belt. That's the reason that we don't want to get into too many products.
So you just made a statement that there are 18 belts that grow specific fruit. Pomegranate. So there are behemoth of startups coming up because people are realizing the potential in agriculture sector, and it's tax free. So sir,
it is not tax free for someone who is buying from farmer or a local area aggregator, or who is selling. We pay a lot of taxes, we pay a lot of GST, we pay a lot of salaries.
It remains tax free for the farmers.
We distribute almost more than 96% of our earning to farmers, marginal, low value or low grade, people, or you can say unskilled, semi-skilled, low skilled people. That is the right way to put it. And I think it is not about earning only profits, but I think we need to create value for society. We need to create value for farmers, and that's how I would put it. Sorry.
No worries, sir. So I was saying that you just said that there are only 18 belts in Maharashtra that does pomegranate, right? So sir, behemoth of startups are coming up. Everyone wants to tap this market. It's huge market. So, but the organized market in India is just 10 to 12% for this segment. So, if everyone is running behind the same 18 bells, how do you ensure that you remain competitive and your business remains sustainable?
Very, very valid question. So first of all, I think what we have learned over the last year is your behavior, your conduct with your supply chain partners, whether it is my labor, grader, packers, whether it is my team, whether it is my farmer, whether my pack house. In this industry, the biggest problem has been integrity. So if you come across 100 farmers or 100 suppliers, and if you conduct their interview or their feedback, you will feel that they have been cheated many times. And that's where we have differentiated ourselves, Prime Fresh, that we have built a very, very great reputation with them. We are very fair in paying to them. We are very punctual in paying to them. Right? We are very, very consistent in going to these farms and helping them to improve the productivity of their farm. We are bringing agronomists, we are adding value, we are trying to reduce their fertilizer consumption, water consumption. So there is something extra which we are doing for these farmers, and this farmer wants to stick to us, or this local supply chain partner want to stick to us. So that is one thing. Second thing, I think there is always importance of learning. There is always importance of relationship. And there is something called experience, the exposure which we have, and that leads to an expertise.
Okay.
So if you have that expertise, which cannot be gained overnight,
Okay.
and if you have an advantage of early mover, and if you have kept on investing in pomegranate as a category, or onion as a category, or orange as a category for number of years, that becomes your edge, that becomes your moat, and then you are able to always compete with new players, or a lot of players with deep pockets. Like we have seen in the last 4-5 years that a lot of B2B startups have come, at least 18 to 25 big startups have come, and they came with a capital base of 100, 200, 300, 500, 2500 crore also, and our net worth as we speak today is just 69 crore. So even so what I'm trying to say, money is not important. It's important to work on the ground. It's important to have that expertise, that experience, that connect, that relationship, and then that track record of doing consistently what you are doing.
Okay.
So for farmers, अरे एक और नई कंपनी आ गई. So for farmers, बहुत सारी कंपनी आती जाती है, but very few people have survived. If you look at the average age of a B2B startup is around 5 to 6, 7 years, within which they have kind of displaced themselves from a category, or from an area, or from market altogether.
Okay.
And I because I have been seeing this industry since 18 years now. It's the 19th year we are into. So I think we would have seen at least 50, 60 startups closing down in these so many years. And even in the last 3 years, we have seen that a lot of startups have withdrawn themselves from F&V or from certain categories. And because you have to work so hard on the ground, because it is 24/7 business, because it is people business, it is not a business where you can run it in office or through technology. People think that technology is an important part of it. Definitely it is, but it is just 15-20% or a facilitator, or it is a tool. But a lot of hard work happens on the ground, and that cannot stop. So I think that is how we would position ourselves. Let's stay focused on what you have been doing good, keep doing good, and people will come. Market is large, so there is a scope for so many people. But I think we will keep growing, because we keep adding so many supply chain partners every year. And as we speak today, our fruit vegetable supply chain, what we have built, is close to having a capacity of 180,000 ton per annum.
Yeah.
Even if we do a strike rate of 30%, 35%, we can still do a very good business, and this strike rate will keep growing every year, and this 180,000 capacity will also keep growing every year. So last year, for example, we could have done a business of, let's say, a sub 30,000 ton as a group. We believe that we have a potential to scale up this business to at least 1 lakh ton in 3 years, and maybe 2 lakh ton in next 5 to 7 years.
Yeah.
So and if you look at the size of the industry, it is around 27-28 lakh crore, which will become 40 lakh crore in next 6, 7, 8 years. So I think there is a huge scope. Competition will put temporary pressure on margins, or cost of people, or cost of raw material, or sometime you will have to travel more to get the material. All this would happen. But I think if you keep doing right thing, and if you stay focused, the volume expansion scope is massive.
So I forgot to ask you, what are the payment, how does the payment work in this sector? Like the number of days you take to pay to the farmer, and the number of days the supplier, the ultimate consumer or business pay to you.
Right. So for farmers, mostly we pay in 1 to 2 days.
Okay.
Sometime it is 3rd day because of some holiday, bank, etc. Okay. In many farmers, we give them advance also, because now we have been in the business for so many years. We know this farmer is reliable, so we give them advance also.
Okay.
And then post harvesting, there is a sorting, grading 1 day maximum, and then sometime it is 2nd day because of some labor issues, etc. And then there is a 2 to 3 days of transit. If I look at the back end cycle, including my advance, it would range between 5 to 8 days. Okay. So where I am putting money. Okay. Then if I look at the transit time of 2 to 3 days, then it is probably say 7 to 9 days. Okay. Okay. Overall, if I were to look at the investment which takes place in different strata, and post that, when I sell to different partners, different channels, the payment cycles are between 8 days to 80 days. So if it is a global buyer, if it is an exporter, if it is a food processor, it could be higher. If it is a general trade redistributor, and if it is reliable party, if it is giving me good margin, I sometimes give credit of 60 days, 70 days also. Broadly in this business, the credit cycle, because of some integrity issue or some slow moving debtors or some non moving debtors, could be around 70, 75 days now. The idea eventually is to bring down to 60, 55 days.
Okay. Sir, in tier 1 cities, there is a lot of young population like me who is one lazy, second find it very convenient to order from apps like Instamart, Zepto, Blinkit.
Yeah.
Almost there are 5 orders daily from my end. So have you collaborated or have you ever thought of collaborating with these
Yes.
startups who provide fruits and vegetables?
Very interesting question. Since 2021 financial year till now, our large part of growth has come with the help of e-commerce boom.
Okay.
So we are very well a good partner with Blinkit, Hyperpure, your Zepto, Country Delight, Reliance. There are a few more like Puro Natural.
Okay.
There are some modern trade retailer like Ratnadip in Hyderabad. So we have been growing with the help of these partners, and we have been supplying them across around 10 cities in India.
Okay.
Primarily, our focus is more on Delhi, Lucknow, Ahmedabad, Mumbai, Pune, Hyderabad, Bangalore. So there are other cities like Chennai, Jaipur.
Okay.
We have been supplying to these all players.
Okay.
Yeah.
Sir, an irrelevant question. It could be an irrelevant question. Blinkit's dark stores also operate on franchisee model, right?
Yeah.
So, do you sell your produce to Blinkit directly or to these dark store owners?
Blinkit directly. So we will supply
Okay.
to the warehouse of Blinkit or a Zepto or a Swiggy or
Okay.
a Country Delight.
Okay.
From there, material will move to the dark
Okay.
stores.
So, Blinkit is the main buyer, and from the main store,
Yeah.
dark
Right.
stores.
That's
are
how the
fulfilled.
it's a hub and spoke model.
Okay.
Where,
hub and
where
spoke.
my material has come from the farm or my end warehouse.
Okay.
Okay, which has come to the Blinkit Delhi warehouse or a Blinkit NCR or Blinkit Jaipur warehouse. From there, it is sometimes sorted graded, sometimes it is already sorted graded pack, and then there is a segregation and indenting, and then there is a dispatch dark store wise. That's how broadly it works.
So moving to macroeconomics, the next question that I'm going to ask you is pretty sensitive. There were 3 farm laws that were introduced by government in 2020, but facing a lot of repulsion from people,
Right.
government had to take back those laws. If these laws had passed, how would it have impacted private companies like you?
With respect to fruit vegetable supply chain, I think we need to understand fundamentally that the whole business is quite fragmented.
Okay.
At the farm level till the consumer level, right? Because it is unorganized, because it is fragmented, because there is a lack of clear supply chain which has been kind of professionalized. The growth has not happened the way it should have been.
Okay.
With these laws, you could be able to consolidate lot of farming. You could be able to consolidate warehousing. You could be able to consolidate the logistics and bring down the cost structure.
Okay.
Right? So today, it's not easy to do contract farming where both the parties are pretty safe, right? But with these laws, it would have been quite possible that you could have institutionalized the whole structure from farming to distribution. Of course, whenever the law changes, any new changes happen, some people will emerge gainers. But overall, as a system, over a medium to long term would end up benefiting because end of day you have to become efficient.
Okay. And would that have been beneficial for farmers?
Yeah, it would have been beneficial for farmers as well, because a lot of farmer, when they do a contract farming, they would end up getting cheaper supply of agri inputs. They would also end up getting assured buyback of the finished product. They could also end up getting technology, service, mentorship, etc. And small and marginal farmers could consolidate their land with some sort of a structure where large scale farming happens. You also had raised a question during our discussion about why in Vietnam or some country
Yeah,
they are very good in
yes.
quality or the fruit appearance or fruit packing. It's simple scale. So the agriculture is not getting industrialized in a sense. Okay, so because it is fragmented, as I mentioned, because it is unorganized, it does not make sense for corporates to come there and invest and keep so much patience. But with these kind of laws, a big investment can come,
Yeah.
right? And big revamp can happen for the industry. And over the medium to long term, consumer is also beneficiary, farmer is also beneficiary. It's like liberalization in 1991 when it happened. In the first 5 years, many companies shut down. Many companies suffered. Many companies, like in steel or cement or many industries, had to go through a tough phase. But as and when, because of these regulations and law and changes, the market started evolving and market started becoming bigger, and the technology started coming, funds started coming, things started going into the different scale and orbit. And eventually today when we look at, we all praise and we all are very happy what happened in 91. So I think initially always change looks pretty difficult and scary for some set of people, some segment of people. But when I were to put it in a total overall theme, I think it looks pretty interesting.
Yeah.
At some point of time, it will always benefit to everyone.
Yes, sir. So to give the context to,
and this is exactly the reason why Indian exports are not doing well.
Yeah.
Okay, so you also had discussed in our conversation that why some countries are doing well in exports and why India is not doing so well in exports. So because our farms are fragmented, small, they are not able to service well. We are not able to service to farmer well. We are not able to reach everywhere. Because of that, our output is not consistent. It's not of that high quality. Certain percentage, very minuscule percentage, is also only worth exports grade material.
So I think just to give context to the viewers, I recently went to Vietnam, and as I told you, the fruits there were cheaper, fresher, and felt more organic. And when I did some research, it was just because they had a very strong network of supply chain and cold storages that India lacks. So cold storage and supply chain is one thing, but do you think involvement of many layers is also restricting India from growing up to full potential, be it government or be it other layers?
Very true. So if you look at globally, the large players are grower exporters. So a grower having a huge land parcel, having a huge mechanized, automated, systematic farming, because there is a large land available, then it is possible to invest and kind of make it a structured way of growing. And at the farm level itself, because you have a huge land and huge production, you can create infrastructure for sorting, grading, packing. You can call a container for loading. You can set up a cold storage also. So everything will be seamless, integrated at single point or very close by, and there will be only one or two set of team who would be handling end to end, and there will not be multiple stakeholders and multiple partners, and there will not be kind of a lack of accountability, right? And hence you could create a scale, you could create a consistency, you could have an output which is more uniform in nature in terms of size, color, taste and all. And hence you could grow your export to a next level. So this laws would have been helpful to create a scale in farming, and hence to create a scale in supply chain, and hence to create a scale in processing or exports.
So then why did the government feel the repulsion from farmers? Was it because they were not educated enough, or second, I would say, was it a propaganda that was run?
Right. I am too small to comment on this, but I would say that some sort of
miscommunication was
miscommunication by many other stakeholders. Probably a lot of time is still required to educate the beneficiaries who are the farmer beneficiaries, and also a lot of employment which could be generated for farmers family. Maybe some education, some hand-holding, some more efforts are required to educate all stakeholders that how it is useful and beneficial to everyone.
Okay. So second last question. If contract farming, if every other company in India starts doing contract farming, how does government ensure control over these farmlands, which is also an essential product for Indian economy, right? If all the private players come in, take this contract farming, charge their own prices, so it's a very essential product. So are there any regulations or restrictions that you face from the government side, be it supply or...
No. For fruit vegetable supply chain business, what we run, we don't face any regulation issues, any pressures. I think it is more of an efficiency. In some product, government agencies may come and buy at some point of time. That's it. But when you are talking of allowing private players to build large contract farming or storage or distribution infrastructure, and as a result of that, if you think there could be some sort of a spike in inflation or profiteering, etc., I don't think so, because end of day market, open market, it's a very efficient market, right?
Okay.
It's a very information driven and hard work driven business, right? And everyone is allowed to come and set up, right? So government of India or state governments have multiple schemes for not only farmers, not only FPOs, not only small entrepreneurs, but everyone, that they can come and set up their infrastructure, they can build their businesses, they get a lot of subsidy, they get a lot of schemes, the benefits. So in my opinion, these things will ensure that there is a professionalization, there is a institutionalization, and hence over the time, everything will become more attractive in terms of quality, in terms of price, in terms of speed. So I don't have a fear that private players coming in and investing will harm, or government will lose the control. I don't think government should control. I don't think government is required to do any mechanism to control things. India is self-sufficient in most products, and India can increase its production manifold with improvement in technology and information and right strategy, and of course right teamwork. So it should not impact inflation or profiteering. What
Okay.
people think.
So coming to the last question now, I read somewhere that your vision is to reach to 2,000 crores top line in
Yes.
next
Yeah.
7-8 years, right?
Yes.
Which comes to a CAGR of 30 to 35% per year. So
Yes.
what is your plan for that?
Right. So the growth strategy which we have identified for us is couple of points we cover it. One is a product specific growth strategy, the market specific growth strategy, and also the channel, the sales channel specific growth strategy. And the fourth and the fifth part will be forward and the backward integration. So when I talk of product, of course, the existing product which we are doing, whether it is 3,000 or 5,000 or a 10,000 ton in a particular category, each one of these product has a potential to become 5,000, 10,000, 15,000 category in terms of tonnage growth.
Okay.
Now, in terms of existing 85 districts where we work, our sourcing network, as I mentioned, is close to 1,80,000 ton, and it will keep growing at a very 10-15% minimum. And if we look at the existing sales which is happening in terms of tonnage, is sub 30,000. So there is a huge scope already in existing supply chain.
Okay.
In terms of channel, sales channel, we have a lot of focus on northeast and the southern markets.
Okay.
These markets have a huge scope where we can move the material from Gujarat, Maharashtra, Rajasthan to south or UP.
Okay.
So that's the channel or a geographical strategy. We believe that we will keep growing with e-commerce growing. Export is another vertical which we are working very hard, where we are building a separate team, dedicated resources, where we can put in some good resources and scale up that vertical to a good level. We are also tying up with food processors. We are doing some forward integration where, because we are good in procuring fruit vegetable, because we understand the season, because we understand the value addition, the cost involved in value addition, we are tying up with a lot of food processors. We are also thinking of putting up our food processing units. We are tying off. We are thinking of tying up with food processors as a buyback job work agreements, and these forward integration will also create a value for us. In terms of backward integration, we have a subsidiary, Florence Farming Private Limited, where we can acquire a lot of land on a long lease, because a lot of large players with large land holding are very keen to give their land to Prime Affairs Group for contract farming. So with that contract farming, our control will improve on sourcing further, our cost will come down, and our margins will go up, and that is how it will help us to grow. So if I were to summarize it, we are creating category heads. We are creating new channels like Horeca, exports, processors. We are trying to add few more products like green peas, carrots and all. We are trying to ramp up existing product portfolio, and all that should ensure that we will grow. However, we will have to put a lot of money in technology, marketing and team.
Okay, sir.
These three things, if we keep doing it, then I think sky is the limit.
Yeah. Sir, sorry, I missed two questions. First question, how do you compete with government's MSP prices?
Yeah. So in our F&B supply chain segment, there is nothing called MSP. So government is not there except in onion. Sometime government announces through
so
an
the
affidavit.
product portfolio is entirely different from what
So our product portfolio does not get impacted through MSP.
Okay. So second question, if I look at your revenue and then at the same time COGS, they move linearly. The ratio is 1:1.
Yeah.
So is there any scope? Matlab, it's not volume run business. So is there any scope of expanding margins? If yes, how?
Right. So if you look at last 2-3 years, we have been investing very heavily for future growth. We have been investing in people, traveling, packing material, inventory, and we have also seen some sort of a cost pressure on the staff cost, on the product price, the working capital requirement, and also the logistic cost. As a result of this, you are not seeing a margin expansion in last 2 years. However, if you go back to the previous 3-4 years, as a result of volume expansion, we have seen a good margin expansion.
Okay.
So I think the business is going through a phase where our margins are not expanding.
Okay.
Probably it could go on for another year in our opinion. As I said, we are working on margin expansion through backward integration, forward integration, exports, and few new channels. Again, the margins should start going up. So what you have seen in the last 2 years is that our margins have remained flat or dip in some time, and it has not expanded. But the margins have expanded post our listing. We were listed on 31st March 2017. We were at around 1-1.5% net margin, and it has moved to 5.5-6%. So there is a phase in business where you have done so well. Now you are consolidating. Now you need to reposition yourself for the next phase, and you need to rework on your style of working. You need to rebuild certain things. You need to work on backward forward integrations, and you have to think that how I improve my margins, because my customer is not going to pay, neither my farmer is going to compromise. Right? So I have to add value. So that's the whole idea going forward. Maybe at some point of time we will start seeing again some sort of a uptick in our margins.
Okay. Thank you, sir. I hope you have answered all the questions of investors. Thank you so much, sir. Thank you.